Market fully pricing in that you will get a rate cut in September. If you analyze the report, you'll see that you had the uptick in services, but the concern for last month was about the good side of the report, and that has moderated. Look, overall, for me, it's simple. When we're thinking about inflation and tariffs, there's enough revenue growth, Steph, in the earnings that the companies are able to absorb it. Obviously, it's a little bit of a hit to profit margins, but that's okay because the revenue growth is there, and that's what we're seeing today.
I mean, it's not a lock according to Richmond's Barkin. He's neutral, his take is. Balance between jobs and inflation risks are still unclear. And then Schmid of Kansas City, he's a full-blown hold this morning. Maintaining restrictive policy stance seems appropriate. But the market is speaking, Steph, and speaking loudly, as is the president. And he's going after Powell again today, calling him too late. And then he went all phonetic on us, too. I think that's what that is attempting to be about Mnuchin. Unless it's a dig of sorts, I'm not really sure. Mnuchin really gave me a beauty, in quotes, when he pushed this loser, the president says, about the Fed chair. And he goes on, of course, to make the case that he needs to cut rates. What say you, Stephanie Link?
So a couple of weeks ago, we were at a 38% chance that the Fed would cut in September. And now we're at 96% for 25 basis points. And now there's chatter about 50 basis points. Oh. I think 50 basis points is a stretch in a big, big way in my mind. But it's all going to depend on Jackson Hole and the tone from Fed Powell. I think he will be a little bit more dovish, but not the 50 basis points dovish. But there's no question the Fed is changing. You're seeing a shift right before our eyes from being really, really hawkish and almost blind to the macro data to a little bit more easy. So this is a kind of buy the dip market. If we get volatility off of Jackson Hole, September volatility because of seasonality, you buy the dips. I have been buying the dips since February at every chance that I have been able to get. And I was certainly early in February, no question about that. But I was buying in April as well. And then on the earnings, I have pounded the table that good companies, bad action is a buying opportunity for the long term. So names like Wells Fargo, Eaton, Freeport-McMoRan, IBM, Uber, Vertiv, all of them I added to. You can't wait, Scott, for certainty. You have to buy in uncertain times. But what gave me confidence in terms of buying on the dip is the economy. And we've talked about it, the resiliency of it.
Okay. Brian Belsky. So question one, is September a lock? Let's pass that and go to question two, because I feel like it's more relevant to the market and our viewers. Does the market need rate cuts to go meaningfully higher?
I don't think it does, especially considering how strong the sales growth has been in the quarterlies. If you look back and really dig into the 500 companies, or the majority of them that did report earnings, we saw very strong revenue growth. Margins actually held in there. And all of this was forecasted and foretold by very strong and steady earnings revisions coming into it. Now, obviously, the market will be disappointed given the fact that we're at 96%. I don't think there's a chance, and you know what, that we get 50, but I think that's more chatter that people want something. But I think 25, I don't think it's completely baked in, especially considering that spending is good. Inflation's steady, unemployment's steady. I mean, if we started to see maybe wages go down a little bit or even inflation go down a little bit more, Scott, I think we can bake in the 25. But let's just take a deep breath.
But I mean, if the market gets the idea, Jimmy, from Jackson Hole, that it's not going to get the cut at all in September, which direction does the S&P 500 go, which we said hits a new record high today and is trending over 6,400 as a close for the first time ever?
Let me take the easy answer to your question. The equal weight S&P 500 goes down unequivocally if that happens. If he does not, if he's hawkish at Jackson Hole.
Well, you're seeing evidence of that kind of today with things like that, and the Russell.
Right. The flip side.
The Russell's up 2%.
Right.
Again. So that's the rate cut barometer right now.
That's exactly right. So sometimes we say, geez, even if I had the news yesterday, I wouldn't know how to trade it. If you knew that he was going to come out hawkish in Jackson Hole, you would short small caps. You would would short the equal weight S&P 500. You probably would go long the Qs just because in a bad time, even though the economy's good, it's the mega cap techs that do well. So again, I think you're seeing today that the 25 basis points is baked in. I think it would be politically unwise at this point. Now, this is counterintuitive for him to not cut or for the board not to cut. Here's why. If that happens, I think that's the point at which Trump goes nuclear on trying to fire Powell, et cetera, et cetera. So, look, Powell, drew his line in the sand and held to it in July, fine. There are multiple reasons, including a softening labor market, to cut in September. And I do want to just not go rogue here, but I want to say something. I think the lambasting of Powell is misconstrued. Remember 3 years ago at Jackson Hole when he came out and basically said, expect pain, mic drop.
Yeah, 8 minutes of pain, right?
Yeah.
It was an 8-minute speech.
I mean, it was a hell of a speech. And we haven't had a recession. He stuck the soft landing. Look, he made mistakes. We know that. He deserves credit for that.
And I don't just want to have a debate about that. I want to stay focused on the market. You sat up in your chair, kind of leaned forward as Jimmy was talking. You just want to say something?
No, I like it when you go rogue, man. That was awesome. No, I think, too, that I don't think the market needs 25. I really don't think.
Forget about the 25. Does the market need cuts? Because we know that if there's 25, there's more after it.
Yes, I do. Down the line, yes, they do. Fundamentally do, because we've had this period now, and I do think there's going to be some uncertainty with respect to how growth is in the fourth quarter. So I think September could make sense, but I think ultimately we're going to get a cut in the fourth quarter versus now.
So yesterday we told you that 91% of respondents in the latest B of A fund manager survey thought stocks were overvalued, but that the results were still the most bullish in the fund manager survey since the beginning of the year. Here's more. B of A today, their flow show, the biggest single stock inflows in 2 years. In 2 years. U.S. clients bought U.S. equities for the second consecutive week with big inflows into single stocks, $4.3 billion. Inflows chiefly into large caps. That stays with the trend, right? And tech saw the largest of the inflows, where industrials saw the biggest outflows. Industrials have been trading near a record high, so maybe not a surprise that some profits are being taken there, and maybe those proceeds are just being put back into the tried and true mega caps, which leads me to Brian Belsky.
Yeah.
You bought more Alphabet.
We did.
That's an interesting one. Why so? Why now?
We continue to build our position, especially considering the stock went down dramatically when this whole notion of search is dead forever. We doubled our position. We added it in our value portfolio. It's now our largest communication services stock in all our tactical money. So from the cash perspective and the AI growth that we continue to see in Google, and again, the reality that search is not going away, this is a company that we like. And by the way, from a portfolio construction standpoint, we think it has a lot of room to catch up, especially with respect to Meta.
What did you make of the way the stock traded post-earnings, which wasn't great?
No, I mean, Steph was talking about it. You get great companies that trip a little bit. That's when you add. And I think given the fact that Meta's been so powerful and all the numbers have been perfect, we think that stock is actually priced to perfection, and Google's been given an opportunity to kind of add on a relative basis with respect to performance.
By the way, how about this? The Journal reporting a little while ago, Perplexity made a bid for Google's Chrome browser, values it at $34.5 billion. They're thinking of, potential breakup scenarios, I suppose, and thinking about which parts could be out there that would be the most valuable for what it's trying to do. What do you make of that?
I think that's positive with respect to just the being able to value that part of the business. We've long talked about how important YouTube is, and if you pull out YouTube out of Google, it's actually bigger than Netflix. So, I mean, this is a company that I think has been undervalued for a while, and that's why we added it to our value portfolio.
Joe, you have Alphabet.
I do. Look, I think, first of all, Perplexity seems to be pretty aggressive in a lot of what they're doing and looking to invest further in the business, diversifying the business. I know that OpenAI had expressed an interest here as well. So you like to see this type of activity. And I think just, look, it's indicative. You're asking the question, where does the market need, what does the market need? You have the AI catalyst, and the AI catalyst is real, and you're citing the largest inflow into technology companies. Well, guess what? It's because in the last earnings report, it looks like the AI catalyst is back once again. It looks like semiconductors, which were asleep, which were being punished because of the potential tariffs, it looks like they have come back once again. So that part of the market, it doesn't need the rate cut. It's the other area of the market that maybe needs the rate cut to get the dispersion. But if AI is back, and Jimmy, what has fueled the market over the last 3 years, you could credit Jay Powell, I'm not going to debate that, but it's been AI. It has been all about AI, and I really believe this AI thesis is in the early innings.